All right, let's go ahead and get started. If you didn't get the memo, I'm sure if you're here, you know what we're going to talk about. But just in case, we're going to do this a little differently today. I'm going to talk about the market real quick, where we're at. Unfortunately, I got an API kind of crash overnight or something, and my MotiveView charts have big gaps. I think I'm going to end up biting the bullet on the Coinigy API. It seems to be a little bit more reliable, so I'm going to probably set that up. Probably not going to be a lot of requests this weekend until I get that set up, because I'll have to build out some data. But I'll at least try to be on and tell you what I see going on. And so let's talk about this morning. You know, if let's see, let's look at a MotiveWave chart real quick. If you track the two counts, I think everything I've been tracking is still alive, although I see a little bit of more promise in either the orange and the red right this morning, that you guys can imagine. If you look at my chart here, unfortunately I got this big gap right here in this candle, so I'll supplement this with TradingView. But this is a really key point, because we're actually right where this white can roll over. However, some charts are starting to already show 5 up here, which would suggest that this is not going to happen. So I'm starting to lean towards either the orange or the red, and of course I prefer red because it's got a third underway. So let's see how it goes. I think Chappelle had very similar alternatives in his count. I mean, I think we kind of, he and I often see the market the same way, with some differences here and there, and we often discuss more than you guys know on PM. And so we're in a key point right now in this little rally we have here. Let's go over to trade. Let's get rid of MotiveView since it's kind of useless this morning. One chart I've only had a few charts up on my MotiveWave this morning, on my TradingView this morning, and so I only have what I have right now. But what I really actually like is what Ether Classic is doing. On some exchanges, this is the low, which is really clean, pretty clean 5 up through here, and then very, very nice correction. In fact, look at this correction. So we got an A wave here, and this might be a B wave triangle, but it's clearly a B wave. And then we've got a nice C wave down, and boom, here we go, and we've already got 5 up. So this one should get a little pullback and then launch if it follows what a normal Elliott wave expectation would give it. Technicals are looking good. You can see that the MACD is slowing down right at that 5th wave. So if you look at, let's get that really closely, because I want you guys to start to get sensitive to these kinds of things. It's a little hard to see. Let me see if I get rid of the histogram. It's not actually slowing down that much, actually, but a lot of times what you'll see is it start to roll over and curve, and that's not a sell signal happening so much as a little pullback maybe starting. So I really like what Ether Classic is doing. Elliott, I'm sorry, Ether, the Ethereum, the original, or I guess it's not really the original, but is actually about to show 5 up, and if you recall a post from yesterday, it's right about where I want it to be. So this is really nice. What I don't want to see now is a break below 115 before this 5th wave is finished. It's fine after it finishes, because we would expect a little wave 2 pullback. We call this wave 1 of 3. If it follows the red path. If it's not if it's the orange path, then we should get another pullback and just see a launch up into the 130 region, which we can call this the orange leading diagonal. But I would love to see this right now, get one wave up, pull back, and then launch in third of the third, and then we have the red count in play. Again, just to remind, we're all basing the probability of the red count on a truncated bottom, because this low right here, though made in kind of a weird ending diagonal, is not lower than this low here. So it's truncated bottom if this really turns out to be the impulse starting from this point. So it's a little bit unreliable, but Avi and I were talking about it. He thinks it's pretty classic looking for a truncated bottom. So I'm kind of leaning on him a little bit. Look how it's moving. It's going to get that 5th wave pretty soon. So we're looking pretty good with some caveats. And so the way I treat this is just let the market tell us. If you want to have a very tight stop, 113 would be a very safe stop for this to play out in the white count and go down if you're concerned about it. I personally will hedge if I see that drop. I'll keep my long positions on and hedge, because I don't expect this to get much lower than 90. And then in Bitcoin, it should touch 33,000 to 3,200 right in that long-term support zone. Doesn't mean it doesn't eventually break, but that's just what I see in terms of the setup. We don't have a very high pullback in terms of our trends, trend down from the November 13th high. So the setup isn't big enough to really create a really strong drop. Well, I shouldn't say that. It can. Sometimes retraces are shallow. However, That would not be my main thesis. So if we get a fifth wave down, and what I call the fifth wave, and then we get a pullback and we set up again for a drop, then something else is in play. So, but mainly right now at the moment, I'm really looking up in the short term until this breaks down and surprises me. So pretty good. Really good spot to start seeing this. I mean, Bitcoin is a little bit confusing down here in terms of which is the low. I looked at some exchanges. It might be this. It might be this. Unfortunately, if you look at the micro count I had posted, I expected a new low here. So it might be we had a little truncated bottom within a larger truncated bottom, or we're really just looking at a big leading diagonal. I don't know what, but if we consider this the low, we have 5 waves already complete. So 1, 2, 3, 4, 5. So I'm looking at subwaves. Yeah, I really can't argue with this being 5 complete already. So I would expect a pullback here pretty soon. Looks like we can get a little nano jog up and jiggle up in here. We're starting to push against any resistance from this wave down. So I expect some good things to come at the moment until we break down, and we can. Let me put some near support on here. I'm not using log fibs, which is not as off when you use a retrace, but below 40, 75-ish is this is BitMEX, but it's pretty close to Bitstamp if you're using that. They run pretty close, is roughly about the low. You can be safe with 40.35, but definitely below 40.35, we have a short setup in play. That being said, this is not a clean 5 down in any way, shape, or form. It's at best a diagonal, and really it's looking like it's missing the A of 3. So I don't even think it's reliable as a diagonal. Maybe if we have this as the 1, 2, that can kind of work, and this is the A of 3, but that's 5 waves. So it's not really typical even as a leading diagonal structure. So where in Ether I can argue that this wave down is an ending diagonal. Ether Classic, it's not even close. It's a really clean, obvious corrective form. So so we take all that, we can take it with sort of a grain of salt, but we can manage it through support. So, and we're going to learn a lot more about that the rest of this time here. I think you guys recall, and I believe since you're here, that today we're going to talk more specifically about Elliott wave, trading it. I'm going to give a little bit of basics for some people that don't know Elliott wave, and it's going to be a little bit old hat for those that know it. I've actually set apart 2 hours for this. I don't think I'm going to take all that space, but what I want to do, I hope it actually gets done with my part in an hour. What I want to do is actually just give you guys room to ask a ton of questions. I don't know the mic system on here really well, but I'm going to try to give you guys a chance to actually use audio. And then if that doesn't play out, we can do it by typing. So without further ado, let's talk about Elliott wave, and then we'll get into. I've got a drawing program where I'm going to try to draw waves and wave patterns and supports and all that stuff and see how that works. And then I've got these charts to reference if we need to. So basics of Elliott wave. Again, I really suggest reading Prechter and Frost's Elliott wave principle. It should be in everyone's library if you're interested in any of this stuff, whether you want to learn Elliott wave or not. Like, get the basics down, because you'll just be able to use my analysis, Japel's, whoever else is providing that work much better. So Elliott wave, this is a theory that was developed by R.N. Elliott, an accountant in the mid-30s, and he noticed that markets move in this 5-wave pattern, fractal, with 3-wave and the pullback. And the terminology we use is this is the motive part of our fractal, with 1, 3, and 5 being our motive waves. That is, that they move the trend forward, and then the trend is retraced in 3 waves. I don't have the rules set, but there's some really basic rules. So, basically one of the big one is that 2 can never ever retrace the entirety of 1, so it can never go past that 0. So that's when I talk about resets. I actually start resetting charts at the 764, but really it's not a real reset until the 2 passes the 0 point, so to speak, the starting point on a chart. So that's one rule. Another rule is that the 4 cannot cross the length of 1. So we have so in this fractal that I've drawn here, and I've tried to draw this best proportions I can. We have the 1 that ends down here, and we have this 4 here, and so you can see how far apart the 4 is from 1. Now there is in modern Elliott wave theory, there is the diagonal, which 4 can cross 1, but the diagonal can only show up in a wave 1, that is this wave 1 of a 3, a 5, so a 5 of a 3, or a or this whole wave here could be an ending diagonal, a C or an A. So it can be what's called a leading diagonal, which starts a form in a 1 or an A, or an ending diagonal, which ends a form in a C or a 5. So that's the only time we allow the 4 to cross 1. And this is where, when that 4 crosses 1 and something we don't expect, we know we have a tip off that our count is invalid. It's one of the strongest signals. But I also hold 4s. Most of the analysts hold 4s to being pretty shallow, and we'll talk about that further. So there's some rules some more clear rules to make more reliable counts that we use on Elliott Wave Trader. There's probably other people use it, but we are very strict about it. So we'll talk about that. And then again, the retrace is normally a 3. I mean, in a 4, you can get a triangle, which is a 5-wave retrace, mostly sideways. So there's different forms of, WXY, which is sort of a triple 3, which is 8. It's almost like you get an extra A, B, and C in there. So there's different variations of this, but normal is the 3-wave correction that we see. So you want to try to understand that. So when I'm saying, someone asked me before we even got to this point is what do you mean when you say 5 up? Well, if I'm tracking a downtrend and I see 5 up, there is a chance it's an A wave. So you get A, B, and C up, and then we'll see more downtrends. So we'll talk a little bit about that, but it's reasonable to think if you get 5 up that you might be starting a trend change. It's just the first one is usually small, or same, the vice versa. We could have a uptrend that we've been trading, and then you get 5 down, and so that's 5 up, 5 down. When I just post something simple like that, it's I'm just simply saying that we may be starting a trend change, but if it's my first post and I'm not putting a lot of parameters on it, my style is just to call that out so that it's just an alert to say, be ready. But it doesn't mean anything until we start to break resistance or support. So that's what that means basically. And so you should take a very simple post like that as an alert to be aware if you're interested. So that's kind of the basics. So again, and another important point, actually 2 very important points. One, the whole market is fractal. So if you understand that this motive wave is divided also in 1, and if you dove into the micro, this would be 3 waves as well, just as this is 3 waves. So we have this sort of fractal nature of the market. And then this whole completed 5 is this larger 1, 3-wave pullbacks larger 2. And of course, by nature, we would have a very large 3 way out here. So basically when I'm building a count, I'm taking the entirety of the count and finding the largest fractal, and then starting to work in to the latest price action to start to develop a thesis of where we go. So I'm actually, whenever I'm doing a micro count, I'm trying to figure out how it fits into the larger game. At the same time, it's sort of 2 parts of my brain. And as a trader, sometimes I can't get that perfect. I'm going to trade what setups I see in the short term. But it's certainly far more convincing if the fractal I'm tracking in the short term lines up with larger fractal. We get a lot of twists and turns in the short term price action. So a lot of people throw their hands up after being on the cipher and saying the Elliott wave doesn't work. Well, in a micro count, as price action is live, it's very hard to figure out the count, but that's why we have our levels. And what I want to you start positioning those levels more effectively so that you're not dismayed, because it is, at the end of the day, Elliott wave is really, really great about showing where the risk areas lie if you learn how to use it well. And so you can minimize your risk and also increase your R&R, and you will become a profitable trader over time if you learn how to use it skillfully. You'll do better if you learn Elliott wave and how to do it, but if you can't, and you want to rely on some else's analysis, I really want to try to leave you at the beginnings of that learning here today so that you don't throw your hands up and get frustrated. I want all of you guys to be profitably consistently. So it's actually, I have, some people know this about me, but I get it's basically a business, Elliott Wave Trader's business, but I tell you it's about my profitability. I care about profitability, and it's not a line that I'm reading. It's actually just a lot of meaning to me. I mean, it's just I get PMs I got PMs after the run, the bull run, and And I can't tell you, like one guy actually retired at the end of the bull run last year, shared with me in PM. That's amazing. I'm and I hope that happens to a lot more people. And then same time I get, complaint to the PMs. And if they're, professionally sent my way, I actually will be helpful. I won't be taken as criticism, but if it's, if it's obviously unprofessional in the way it's done, then I won't listen at all, because it really comes down to you using analysis well. So it's, again, I want you guys all to be profitable. It's super meaningful to me as a person. So that's what we're trying to do here. So that's kind of the basics. If there's any questions along the lines that I can, I will do my best. It's a little bit hard with this little text window that I have to read your questions. So I will do my best to double back on questions and figure out how to explain it. So I hope everyone understands really this fractal nature market. This is a real critical basic level. And if you zoom in on any market, except for oscillating markets like VIX or some of the Forex, doing Elliott wave on Forex is a bit difficult. And then ABC charts of Bitcoin basis crypto charts tend to oscillate a little bit more. You still get 5-wave moves, but they tend to be double back on each other a little bit more, where long trending US dollar basis, partially because of the inflation of the US dollar, will trend in this format. So it's a really reliable. Basically, all markets follow Elliott wave in some way, shape, or form. Figuring out what it is the problem that we have. That's what we've got to do. Okay. So and then also you have to really consider that all of this was for Elliott. RN Elliott was based on sentiment, and it also he would say that the sentiment of the markets follow a sort of a natural path. That is that fractal nature of nature and the ratios that we follow are all based in nature. As a designer, I study the golden section. Golden section is part of markets and how markets move. I'm just talking at a sort of a gross level that. That basically sentiment has a natural pattern, is basically what he was saying. And we also tie sentiment to the wave pattern. So if you think about markets, let's say we're in a downtrend into this starting point here, and we get the first, let me try to make this bigger for you guys, see if I can zoom in. I realize see how this works. Yeah, it's a little bit better. Okay, so if we imagine a downtrend into this area, the first wave up really has this disbelief. Even as analysts, I think it's healthy disbelief, but we give it a chance. But you can believe that the general market, when we had the first wave up off the recent lows, the general market was saying, okay, now we're going to go for 3,000. We're going to go for 1,800 or whatever. I mean, it was pretty bearish out there. And then when we get this wave 2, which, actually, if we pan out to take the bullish route right now, we're in a wave 2 right now, or just had bottom in wave 2, and we're looking at this wave right here. So this is our roadmap for the next micro. And you can see a lot of disbelief on the website and also out there in Twitter space. So, a lot of people saying that the bear market has returned. Again, I don't know if it's going to pan out, but these are the sentiment markers of these wave patterns. And if I looked at optics, which I'm using on the side now, which we have very low reading in optics still, we dropped down to 9. We had done a almost all-time low, popped up to 30, and now we're back down below 10 as of close Friday. So people were pretty skeptical yesterday. You can see it in the sentiment. I think optics is actually a better short-term read than me trying to read the Twitter space. It seems pretty reliable, and it's also been back tested, so to provide a return. So it's pretty good. And then as you move into the third, and again, we as Elliott wave trader, we always say, you're really trying to catch the third wave, and so I'm going to try to teach how to do that here as best I possibly can. But that's the longest, most subdivided wave. In fact, there's a rule that the third can never, ever be the shortest wave. I've heard arguments that it can be in a diagonal, but it's not ever the shortest wave. You can have it the same as the 5 sometimes, if the 5 is extended usually. But then if that's the case, you would never have the 1 be longer, because you got to never have third as the shortest. Now, most of the time, it's the longest, most subdivided wave. And so you have this very long trade. In my options trades, I don't long premium unless I'm in the third wave. There's just absolutely no point. In fact, I think I've learned it's more reliable to actually just trade the third of the third when I'm long premium. If you don't know what I mean, I'm sorry, but option trading, you're either long or short premium, which is sort of a whole nother discipline in itself. But I do that because if you're a long premium, you got time against you. Your asset base is starting to decay. So I want to get that fast. It's often also the fastest wave. So I want that fast return that also outdoes all the premium that I bought. So same thing with cryptos. You're going to get the fastest return in the thirds and ignoring everything else. You can honestly, if you want to be a really disciplined trader, just trade thirds and ignore everything. I have to make a regular income, so I trade other things, but I definitely size down in everything else versus putting so much of my trade into crappy parts of the chart. So and then so often, one of the reasons that this wave is like that sentiment-wise is because down here everyone believes the bear market returns. So there's no money in the market, and all those players that got out or doubted the market now are forced to buy higher, and you get what's called the chase in the third. And that's why why you have this very natural pendulum swing from almost destroying the run up, bear market's likely to return, to the chase. And so if you think about it, it makes a lot of sense. And that new money rolling into the market from those people that got out pushes the market higher and fast. And then, when sentiment kind of gets overheated in this third, you get this frustration and this very choppy wave 4 and people getting trapped. And choppy wave 4 should be very familiar to all of us because we've been in one of some degree. I have an argument about what degree, but nobody thinks it's a wave 2 on Elliott Wave Trader that I know of. And because it doesn't work mathematically. So we have a very choppy trade in wave 4, and it frustrates the crap out of people. Anyone feeling that? That's where we're at. So, and it does it to analysts too. I mean, we're not immune from sentiment in its aspects. It's just part of human nature. We just try to learn how to read it and trade against it. And then lastly, the wave 5 often has a sense of euphoria. We had a wave 5 of a third of some degree into the January run up. Did you feel the euphoria? Of course it was there. If you were, if you were in the real estate market in 2007 to 8, depending on which region in the United States, this euphoria really well. The Big Short, the movie, I really actually recommend everyone watch. Actually read the book if you can, but it really talks about this sentiment in markets. And so we're just giving sentiment a mathematical pattern, and you learn how to read that qualitative aspect of sentiment in the backdrop of this market fractal. A waves are often the most brutal part of a correction because they happen suddenly. Of course, it's not all the time, but the strongest techs often show up with MACD pushing really hard in the A, and then you get B as a false relief. B can also go over sort of a false breakout over top of wave of 1, but this is kind of a zigzag, what's called the zigzag that I'm drawing here. There's a lot of different forms to that B, and then C is I often, in cryptos, I often see C as an ending diagonal. It seems to be really, really common in cryptos. I like ending diagonals for explosive reversals, so I love that, but it can be a frustrating trade. Ethereum is sort of a weird non-overlapping diagonal. By that I mean it's structured as a diagonal, but at least I can argue that it is. But the 4 is not overlapping the 1, like you would expect in diagonal. So we have a term here on Elliott Wave Trader called the non-overlapping diagonal. That's basically the structure of a diagonal internally without the 4 overlapping the 1. So anyway, we often see it ending diagonal in the C. And what we're going to talk about now, I think, I'm going to do one last mathematical thing, and I'm going to go to my drawing program and start to talk about the first trade, which is the knife catch, as I call it. And we'll start to develop how to trade this whole fractal pattern. Next, just real quick, let's see, just the basic level. Actually, I should have just stayed in presentation. The basic level, the basic approach we have is Fibonacci pinball, which is developed by Avi. I'm going to try to go into it a lot further. In my video, I'm going to have another link to Garrett's video, which will do a better job about learning all of these little ins and outs of Fibonacci pinball, but just some basic level. Let's see. So, I think most of you guys know this, but quite often we count wave 2 as having retraced 618 of 1. Now we see some shallow ones. 382 is pretty typical. But often 382 is where the A wave shows before the C wave dips into that 618. As you know, should know by, or if you're tracking me closely, 764 is often hit as well in crypto, especially Bitcoin. And it's after the 764 retrace of one where I personally don't trade a chart. My stop exists below that. And we have, it doesn't mean I won't hold a position until a rally shows. It all depends on the market, but I won't be trying to trade it long because once you're below the 764, it's not so much that it can't be bullish, but it's usually the start of a diagonal and don't want to be in a diagonal or something else. It's just experience that even though Elliott said that just as long as 2 doesn't cross the bottom of 1, it's okay. We hold it to a tighter rule, at least I do especially. So, and then we're going to talk a little bit more about these extensions, the subwave extensions, which I enumerated in my big Bitcoin write-up. So you have a nice reference there, but I'll talk a little bit more here. But in log, and I'm going to try to talk about the log calculation actually, but versus absolutes, but normally the third extends. Basically, we're measuring wave 1, putting the 0 point of our fibs here, and usually we see a log extension of 1.618. In wave 3, there's variation, as I wrote the other day, like 1.382 is a very important level 2. And often in cryptos, we see an overextension well past that. We had a number of charts do that in 2017, which was kind of hell to be an analyst. Well, I wasn't a paid one at the time, but challenging when you get out of a chart that just keeps going. So that's something I'm going to try to talk about it. Although I honestly think, unfortunately, that in 2018-19, even if we go into thirds, I really doubt we'll see those kinds of extensions again. That doesn't mean we're not going to have huge returns. It just means that we're not going to see the fibs just go off the charts. So so anyway, we'll see how that goes as we roll through. Now, let's take a quick break for questions. I'll keep this up a little bit. Any questions right now? I won't turn an audio on, but if you want to type some questions, I can talk about it before I move on to the drawing program, where I'm going to start to talk about the trading style and approach to it. We have pretty good attendance this morning, a lot bigger than Friday now, so a lot of people have rolled in. All right, one question. Let's see. Sometimes I hear people start measuring the fib from the swing low prior to the impulse. Usually it appears fib pulse counting the ultimate low. I'm not sure. I'm not sure. I would. I don't start fibs until I have a low. The only alternate is like what we have now, where our potential fib low should be this truncated bottom, like an ether, if the bull case rolls through. So that's a different. So let's let me go over to that chart real quick, and hopefully I'm answering your question. Let me get off of this. So hopefully this is answering your question. Let me know if this isn't. So in this situation here, let's see, ether. So in ether, it would be normal that you would use a low. So you would start to count this wave pattern. The problem is we know this is 3 waves, and then we have 5 down, and that's where we get this truncated. So in all the future, if this plays out and we get that nice big 3rd and 4th and 5th, which I think is up to 135.40 or something like that, or maybe 150. Ultimately, if this plays out, then we would be using this low now as the fib low, because that is the beginning of our impulse. So that's basically, you want to be fibbing off the potential impulse. Again, usually it's the ultimate low, but in this situation, we have a potential truncated bottom, so we would count off the next one. I don't know if that answers the question. Let me know, or you need something else. So finding the zero is usually my confusion. And and usually, again, most of the time you would use the ultimate low and start there. It's just this is a special situation where we may have the truncated bottom. All right, let's see any more questions, and I'll move on. All right, so let's talk about trading. This is where, let's see how well I do here. So what I want you to look at this is, let me see. So you want to look at this as our C wave. So imagine a correction, and this is kind of, right now in Ethereum, we had a potential of a low that was truncated, and the prior low is here. So you want to look at this as a C wave, and so this is basically 1, 2, 3, 4, 5, and let me see if I can. I'm trying to learn this program. I can't move it too much. So you want to imagine this being the wave pattern, and the question for all of us is as we come into an expected low, and often I'm drawing fib targets. Let's say we have a fib target here, and this is a box. Okay, so we have a target into this region. The question that you're gonna have to ask yourself, you can tell that Japel and I are big knife catchers, but I'm going to say this really, really, really strongly. Is if I'm catching a knife, it's a very the goal is to start to get a low cost position, but to not lose my shirt doing it. And I'm going to take a lot of heat in that trade. And so even if I may be posting, let's say quarter position in the swing chart, most likely I may even be like 10%. I just don't have that option on the trade. I may even be less. So my knife catch, and I think in the recent down, drop down, they were the first position was smaller than the last position, which was bigger, because I'm kind of pyramiding. So if I draw my position size as a pyramid, I might be thinking that we're going to get a fourth and a fifth. If you think about the fractal, we're going to have one. Well, let's drop that backwards. 1, 2, 3, 4, 5. I might think this is the low, so I might start to add a position there. But because I don't know for sure if it's the low, I'm going to keep it small. And then if I get another low, it raises the probability further that this is the low. And so I'm going to size up a little bit more. You have to decide whether you want to take this trade at all, because this is the trade that is going to take a lot of heat. And my first positions in this, you can see it on the table, is underwater still. We might get in profit soon, but the positions I got grabbed down here are already in profit, and in fact I've already hedged some of them to keep the profitability. Whether you want to take this knife catch trade on the bottom of finishing C is up to you. What we often see again is the MAC divergence, so I'm going to try to draw a MACD, but we'll see MACD come down in that third and come up, and the fourth starts to drive that divergence. And so then when we're at that low, we'll see the MACD have this kind of trend by the time we hit the 5. And a lot of people ask, how do you set your MACD? I set my MACD so that I can see the individual waves of the move down in the MACD. So I want to see the bottom of the third, the top of the fourth, and the bottom of the fifth in the waves I'm evaluating. So if I'm evaluating a micro, I'm going to set the MACD. I'm going to set them. I'm going to keep the same settings, but I'm going to look at the MACD in a smaller time frame. If I'm trying to evaluate a larger wave 4, I want to see no more and no less than the wave pattern reflected in the MACD, because it'll show me where momentum is starting to shift. So that's when we're coming down again, we have a fib box down here. It may actually, unfortunately, the market, as I've, can always give us another extension and go 4 and 5. And it just means that the 4 and 5 we're looking at is just a small subdivision of a larger wave. We're running out, in the ether, we're really running out of room, because already the C is 1.6 of, or almost 1.6 of A off the B wave, and I'm talking about the A that came off the January high. It's really, really long. Actually, we rarely see a C this long, so it's be surprising to me to not see a turn in ether in this region or at one more low, because it's a really, really long C wave. Usually it's limited to 1.382. In fact, I've seen so few C waves do that. I've seen some in Bitcoin be that long. So I would be really surprised not to see a turn in ether. Whether it's ultimate low, I don't know, but it would at least be worth a larger B wave at the very least. So again, that's why I'm so boldly long risk to reward down in this spot. So regardless of whether it's going to be a B wave or not. So this is the first trade, and so I want to stop here and go, you guys understand this process? It's not for everybody. Reversals are the most dangerous trade of all, and but we have some tools. We have the target here, the fib target. We've got the divergence showing up. We have the look of this pattern. We also have the A equals C calculation from the above. And so let me draw that. Let me do sort of a so if we're looking at, we've got a 5-way move and we've got A, B, C. Usually this is 1.0 to 1.3. I'm going to actually let me type this. So C so usually usually the C is usually 1.0 of so usually this being a C wave, this is A, is usually 1.0 to 1.382 of this. And again, right now, Ether is at almost 1.618, which is really, really, really long. So we have that tool as the first target area, which develops our large fib box. And then we have inside projections of the 1, 2, 3, 4, 5 down and C. So we get an area that we can start to buy the reversal. And we have divergence to suggest, and 1 hour often at this scale to 4 hour is where you want to start to see divergence. And then as it necks down into smaller waves, you start to see it on the 5 minutes, and then that's usually where it turns. And I'll pull a chart over so you can look at that. So then we have that sign, but it's still a low probability trade until the market turns and starts to take out resistance. So anyway, so we have a question here. So if you knife catch with a small position first, and it turned to really be a low, and you add bigger positions on the way up, you would add on the wave 1 and 2. So I'll develop that thought a little bit as we go, and that'll become clear. So I'll answer that question. So that's kind of the basics of it. And so let's look, before I move on to the next trade, let's just look at a chart real quick. We can see the recent lows and the techs. So again, I added some positions here, which is the third. We move. I don't know why I don't even use it for Elliott wave, but we start to see some divergence. Actually, not very strong here, but for some reason, it must be a larger time frame. I took a trade down here, but it ended up taking a lot of heat, and it's going to come back in profit soon if this plays out. But I made a larger position down here, and you look at divergence showing up on the small time frame. But if we move to, let's look at the 2 hour, you can see serious divergence on the 2 hour. Actually, when I look at this, why did I even take a trade there now that I'm looking at it? But I may have been just at the heat of the moment. But you can see a strong technical divergence between this low and that low, and so far this low has held. So, and in fact, even I would say that this MACD right now is looking very, very good because we got another turn up out of potential wave 1, 2. So that's kind of, you want to start to watch for the MACD start to go the other way. RSI is a little bit different. I mean, often in these lows, it's a little bit better to look at a smaller time frame RSI, but you start to see chatter. This is RSX, so it has less, but sometimes when RSI is really complex and chatter, if you use a normal RSI, it often is before a turn. If it's chattery down, and by that I mean oscillating very rapidly down below its lows, so that can be a sign. It sometimes shows divergence, sometimes doesn't, but so I find MACD a little bit more reliable for divergence. RSI though is really, I've talked about this, is the ranges in RSI are critical. So one thing that's happened here bullishly in RSI is that we've really hovered down in this range, and now we have a range break on this high, pulled back into the old range, and now we're pushing again above. And so we may start to, if we start to see RSI on the 2 hourly start to more hover through this zone and start to spend less time down below here, then we have a very bullish RSI. So it's one counter to the normal internet wisdom where you really want an oversold RSI. No, you don't. You actually want to see RSI start to show some strength. So you want to see RSI hover between overbought and kind of the mid-range. And so that would be improving technicals. And you can look back here and you can see that, like most often during this downtrend, RSI stuck within this lower part of the range. So that's how you kind of read technicals along with Elliott wave as you go. And so back to the question. So that's the knife catch down here. The better trade for most people is going to be waiting for that 5 up and then 2 down. And so if you have a small position into this knife catch, and it proves to be the bottom, this is where you add. And actually most people should take this trade, not the prior. In fact, actually, let's go back to drawing. We really don't have, I'm going to erase a lot of this crap. We don't really have a great trade until we have passed the 50% mark. I'm gonna clean this up. I'm keeping that text. So as you know, you'll see my resistance box, and what those boxes are is the 50% mark. It's a little bit out of proportion between 3 and 2. Okay, so the 50% mark, and the reason I'm using that is quite often a wave 4 can come up to that 50% mark. It's a very deep one. Usually it's 382, and then come right back down and make new lows. So once I see a cross over the 50%, I have the first break of resistance in this downtrend. And if it's 5 waves through that 50%, then we have potential bottom. So let's say this is our 50% mark off of the bottom that we strike here. We call that 5, and then we have 1, 2, 3, 4, 5 through that 50% mark. Now we have a much better trade and safer trade for everybody. And so then we would, if you want to wait for that trade, you don't chase it, you wait for 3 back. So A, B, C. That's where we've just potentially crossed with Ether. If we assume that this bottom was truncated, Ether actually it hasn't actually crossed 50%, nor has Bitcoin. But the thing is if you're right up to it and you're only getting a corrective pullback, most likely that third is going to break right through. So I don't really care whether it breaks it necessarily in my own trading, but if it's right up into that resistance level in 5 waves, again, the structure matters, and then pulls back in 3, you have a pretty safe trade. Now, again, let me do some typing here. We like that pullback to remain above the 618. So 618 is the retrace from come on, get rid of this tool. Let's see. Still learning this. Just got it. So that 618 is where you want to ideally get your position. Again, sometimes it can be the 382. So you can again draw a pyramid for your positioning like this, where you start to scale in at the 382. Okay, 382 right here. But usually usually the A wave ends there, and you get a B and a C, and then you want to have a bigger position closer to the stop. If you cross the 764, I put my stops below that because sometimes I might want to add a little bit into 764, but the stop for me is always just below the 764 retrace. Now, still, even if you don't have a full position here, you should have 5 up to the 618 extension. I'm going to explain the extension real quick let me see if I can do it on Motive Wave real quick. Just so you guys understand when I start talking extension. So this is the retrace tool. Here's the 764. I actually have the box drawn down 764. Now, when we talk extension, basically this tool, let's get you can see the extensions over here. This tool is drawn with 1 point at the top of the wave 1, a point at the bottom of wave 0, and then the bottom of wave 1, and then let's put it at the low here. So now you would see 5 up to so these are typical extensions for 3, 4, and 5, and then you would see the subwaves of usually be at right here, with the 4 roughly about the same spot, the 3 at about 1, 2, 3, 6, and this is all outlined in my big Bitcoin write-up. And you would usually see 5 up to the 618, which is at 127. So if you just look over my trading view I shared this morning, 5 up to 127 is really, really good right now, because that's a sign that this third wave is underway. So you would have 5 up to that 618 extension. So back to this, even if you don't have the full position in this pyramid, because we didn't get a low retrace into the 618, you have another opportunity with the 618 extension, which right now is 127 Ethereum. So you would get 5 up here, and then you would get a wave 2 pullback, which is to the 236. Okay, so there's a baby pyramid again right here in 5 up, 3 down. So just think about this. Let's take a step back. No one has to catch the knife, but I like to catch a little bit because it's a low cost position, but it takes a lot of heat. So there's a pyramid here. Then we get 5 up. I'm not going to chase it. If it starts to hit against resistance, a good sign. And then we get 3 back. So now I have a larger positioning pyramid in this pullback here. And then we get a baby 1 of 3. So again, we're looking at a third wave. 1, 2, 3. And we have a little fractal 1 of 3 that shows up here to the 618. We have another pyramid where we can start to position. Now by then you should have some level of position if you want to trade this. But you could be kind of topping it off. Okay, so I hope that makes sense. So when you're in, this is a high risk position. This is a low risk position, this pyramid into the 618 here. And then when the baby 1-2, it's a very, very, very low risk position because your stop now is 7864 of this drop back. So we have 618 to here, 5 up, and another 618 back. And then we have another stop to 764. So you can basically raise your stop from the 764 to the 764 of this pullback here. This puts you in an extremely, extremely low risk position with high reward because we're talking about a wave third kind of kicking off here. Okay, so I want you to kind of sit on that a bit because this is really, really, really important. We're already almost an hour in, so like this is basically the gist of what I want to cover is this position size. The risk of the knife catch, but how slowly as the five waves develop off that low, the risk basically drops and drops and drops. Okay, and we're talking about swing trading here. If we want to talk about long term, you would do the same thing on a larger fractal chart. It's actually no different. You just have bigger fibs, and the retrace levels are farther apart. So you have an increased risk on the long term, except for long-term charts just pan out a lot better than micro charts. Okay, so I know there's got to be questions. Okay, so one question we have here is 50% measuring from the high of the 2 to low of the 3rd exactly. So we would measure, and again, we want to use log, but in retraces it doesn't matter as much. So we have the bottom of the 3rd and the top of the 2nd. Again, those levels might be theory. They might be your thesis that those are the proper levels. And then to test your thesis, you would draw the retrace tool in between, and then the 50% retrace is where, again, if you want to put a bearish 4 and 5 in here, 4 should not exceed that 50% mark. Not normally anyway. It can in diagonal sometimes, but there's ways of managing that, which I can talk about further as we go. Okay. Where do you calculate 50% from? Yeah, again, bottom of the 3rd to the top of the 2. That's where we measure that retrace. Okay. I can go over the whole thing again if it helps somebody. Like I know this is a big deal and hard to swallow, but every bit of analysis I give points all these levels out to you. So if you actually start to understand this, you know exactly where to trade. You don't have to trade exactly the style. You can develop your own style over time. So I'm kind of handing you my approach and where the stops are. I'm gonna develop the 3rd a little bit more as we go, but so that's the next step. But this is the essence, the heart of using Elliott Wave in my point of view. So if you're not grasping this, please ask the question. And honestly, I can go over the whole thing again, just to make sure it sinks in. All right. So those stop comments are really helpful for me. Trailing stops under the 764 microwaves are a great thought. Yeah, and I'm going to develop the 3rd a little bit more because it changes once we're in the 3rd. But in terms of the first trades, you can use the 764 on this sequence of 5s off the lows and keep yourself really, really safe and actually lower your risk as you go. All right. So no more question is please can you go over it again? All right. So we're going to do it again. Let me, again, I have no problem doing that because I want it to sink in like, really, really well. So let's start from the beginning. It just gets messy. So, all right. So again, we're tracking, we're in a downtrend. So we got to, that's not good proportions. Sorry. I wish I had a Wacom tablet. I used to draw on a Wacom tablet in my design career, but I don't have one. Probably should get one because this is probably a really great format. Again, so This is a C wave. 1, 2, 3, 4, 5, typical format. All right. And then we're going to measure from here to here, because this is the 2, and this is the 3, and this is our 50% mark. Usually the 50% mark is going to be around where if you did this right, it's going to be around where this third is, because this third will start to push against the 386 to 50% of the preceding as it goes. But now, sorry, you know what? Sorry, I blew it. I'm going to back up. I blew it in that you would start off doing this as I have it, but once you get a 4 and a 5, you got to move. Forgive me, I've misstated earlier. You got to move this level, the fib, to here once you have a new low. So let's do that again. So again, actually, so okay, I'm gonna start all over. I apologize. All right, so let's say the market's doing this, and we have you're counting this as a potential bottom. So then you would mark it, and you would track the 50% between here and here. Now the market's gonna probably in the first one's gonna be the 4 of the third. So it's so that's this one right here. So that first one, you're going to see some divergence down here. So you would mark it, but you want to be a little bit skeptical if this doesn't look like the 4 of the third. You can try a trade, and I did do a trade as we were doing this in Ethereum and Bitcoin. But then ultimately, let's say this breaks, then you would bring your fibs down to the bottom. Okay, so that's what I blew it describing it. So it's basically, sorry, you use the ultimate low and the top of the 2 as price is progressing. And you'll see when I talk about the third, it's the same thing going up. All right, so that's your resistance point. Okay, and again, I'm sorry for stating the whole thing wrong for the fourth, because if this is going to make another fourth, it's not going to go past that 50 and then come down to another low, and then you would move the fib tool. But ultimately what happened with what appears to have happened in Ether is we did do that, and then we truncated. All right, now we're basing all of it on a truncated bottom, so now we have a bottom here. All right, and then what we have in Ether is 5 waves right up to around that zone. I think it's just the 382. That's okay, but we have a corrective pullback. Okay, and then we are going to measure from here to here and grab a trade between the 382 and the 618. And I'm drawing a pyramid for positioning because you want to make your smaller positions up here and your larger ones here. Because why? Because now you have most of your trade put just above the stop, just below the 764. Okay, is that clear? And then again, we will get 5 waves up here to the 618, and then a little pullback, baby pullback. It's just a micro. Okay, and then we have another pyramid, and we have another stop, 764, this progressing 5-wave fractal. Okay, and then this is the one of the 3, so the next one is the big heart of the third. So this is the launch path right here. Okay, so again, high risk position, divergence is showing. I had a fib target down here, but there's really air. I mean, there's really nothing below this, so this is the high risk trade, so you want to keep it small. And then as the market starts to attack resistance in 5 waves, then you move your stop to 764, and then you have another little baby one show up, and you get another stop move, and then boom, you've got the launch pad for the third. Okay. Okay, so question here, awesome. So when you get a chance, if wave 3 extends beyond normal fibs, are there any fibs stand out? Okay, I'll talk about that. I'm going to talk about third and how it develops. So the 50% is measured from top of wave 2 to the bottom of wave. Yeah, that's where I blew it. Is 50% is measured from the top of wave 2 just to the price progression. So the ultimate low that you have on your chart, that's where you have the bottom of the fib, or it's 100% basically. So 50% between the progressing price action and the top of the 2. And then when you've got to move past the 50%, then you would mark that low as your 5th, and then give it a chance. Basically, it can be it's not that it can't be unended, but most of the time it doesn't. Okay, I hope that works. And then we'll talk about the third real quick here. I'm just going to let's see if we get any more questions. We've already moved through an hour, and again, I'll stick around for an hour as we work through this. All right. I'm going to move on to the third. So now, as we break out, so again, we were using the 618 down in here and the 618 down in here and the 764 as just below the 764 as the stop. Now, once we launch in the third, I'm going to put some rules down here. I'm going to put a very simple rule that Avi has taught us all, and that is once you pass the 1.0 extension, and I'll show that on motive wave so we can see it better, you never want to cross the 618 again, okay? And I'll explain that so that we're clear on that. And this is a very simple rule to keep you out of trouble. Okay, I'm going to put this rule up here on the side. Let's go back to my drawing layer. Now, if we go back over to motive, what that means is, back to my fib extensions. See, I'm going to get rid of this subwaves because this is probably not going to happen right now. Actually, let me just see what the market's doing because I'd like to be on top of it. If yeah, we're still looking okay. All right, back to motive wave. So all right, so on this, once we cross the 1.0, which here is 139, we never want to cross the 127. So once we hit that 1.0, you can put a stop just below the 618. So now imagine yourself, you've taken trades at 110. If we move to the 618, 127, you might add a little bit at 116 to 124, okay, down in here. So let's draw some boxes. Once we have this little white one, we can put stop levels here, and on here it's if I'm not using a retrace tool, it's basically 114 would be the stop as 1, 2 develops here. If we're below 114, then I question it's going to go. The invalid is what would be the 0 point down here, 110. But I'm always cautious. 114 is basically a 764 retrace of the 618 roughly. It's a little bit off. If I'm really getting close, I'll pull out the retrace tool to make sure I'm looking at the 764. Now, then we would launch in the heart of the third, called the heart of the third, which is third of the third, which is this mark right here. And so we would expect in the situation to move to 147, okay? In that situation, once we cross 139, you never want to see 127 cross again until all this is finished. It'll get crossed again later once we finish the fifth, but we would take some profit up here and take some profit up here, and then we would get ready for that pullback, okay? But in this fractal here, we do not want to see that level cross, okay? Now the question, which is the question that someone posed here, is what if all of these waves extend, okay? Now, one thing I want to say really clearly is I never want to see the wave 1 of 3 extend over the 786. In general, if that happens, you have an A equals C, which means A, B, C. We never want to see the third wave, the beginning of a third wave, extend more than the 786. If we don't see 5 waves by then, we have a problem. Usually that means you have a C wave, okay? It's nearly 100% signal. Rarely ever does a wave 1 of, in fact, I get a little bit nervous when I don't see it topped by the 618. So I want to see a pullback after that 618, okay? So that's number 1. Number 2 is the third of third I don't mind extending. But just as we were progressing down here and I was using 50%, I also use the same thing on the way up, okay? So if we have an overextension, let's say the third of the third is above 1618 and we haven't seen a top of the third yet, which normally it tops at 1236. That's okay, but what I'm going to do is, let's see, get my drawing tool out. What I'm going to do, let me clean this up a little bit. So we get 5, so we get 1, 2, and let's say we were way up here and we haven't seen the third of the third top. So 1, 2, and this would be still progressing third of the third, okay? In fact, we haven't seen the 4 and 5 show up yet, okay, of this third. So now what I'm going to do is the same thing. I'm going to take the progressing price, and I'm going to put the 0 point here, and I'm going to look at 50%, okay? Same deal. And again, why is this? It's because fourths hold 50%, okay? So that putting the stop below that 50% level keeps you safely in an impulse, okay? So just swallow that a second. It's the same thing that happened on the way down. I'm doing the same thing on the way up, okay? So you said so on XLM, the 50% would be 18.6. Now, actually, the 50% on XLM, on, if you're talking about long term, is like way down. Actually, it's actually a lot lower. It's like 8 or 9 cents, I think, if I remember correctly. We can pull that up later and talk about it. Damn, bro, I'm grabbing a pen and paper. Yeah, no, this is gold. Like, I'm serious. You want to trade well, like profitably, over and over and over and over. This is how you do it. If you're disciplined on it. I'm not always as disciplined as I say I am, but this is why I'm profitable. Okay, so you would use that 50%, and that should hold your fourth, and you should get your fifth. Okay, so it doesn't matter how much third extends. You should be holding the 50% for the fourth. Now, sometimes we don't know where the fourth is, so we might have a little jog, and this big 2, and we had a little 4. So what I do when I have an extension like this and I break 50%, I still assume this is an impulse, but I don't want to be in it anymore, or at least not with a full position, because what's happening is it probably topped, and so we're going to get once you cross that 50%, the first solution I would expect would be another big wave 2 pullback. Okay, and so what I want to do is take some profit off. Or in even, if I'm swing trading the whole entire position potentially, or leave very little, because I'm going to start grabbing it again at the wave 2. Okay, so that's the first assumption. If you're really extended, it's really hard to think of all of this as corrective. It can be. I mean, this can be a very big C wave, so that's another reason to take profit. But at least if you break 50%, you're in some sort of wave 2 at the very least, if not something more bearish. Okay. Sit on that a second. So it's like, is that coming out clear? I hope it is. I can show, what I can do is show it live here. So if I literally will change tools. So again, this is the extension tool, and let's say this third. Let's draw a fake line of price. Let's say this. So again, I expected the third to top at 447, but let's say we haven't seen a strong sign of a third top, and we're at 170. Let's just imagine that. Okay, so then I would pull. Actually, I like to use extension tool because I like to have some fibs above me. But so I would put the fib tool here, and then you often might see my boxes in my analysis in this situation. Actually, you should always look what fib tool I'm using if you can decipher it. And if I have the 0 on the 2 and the 100 on the progressing price, and I have a box here, I'm doing exactly that. I'm tracking the 50% mark. On the way up. Okay, so then I would expect a fourth wave in this extended third to show up here. And actually, most often, I have to move it out of the dialog box I have. Most often, that fifth will show up in this 138 to 127 zone on this extension tool. It's not a perfect use of this extension tool, but I use it sort of as a quick guide. So I would expect an extended third for my fourth and fifth to look like that if the third topped at 171. Okay, so that's why we use that 50% box. Again, we can go on the price action. Let's go back here in the price action in Ether, and we can talk about resistance for a second. I'm having so many problems with this API, unfortunately. So let's see if we get it. Yeah, okay. Wow, I'm having so many problems with this. Maybe a good restart helps. All right, so again, we're tracking. This is our low right here, and so I'll take. Now I did some funny things on the board, and I did this for safety. I wanted to put. I have this as my 2. But I wanted to be, a couple times I want to be really safe, and I was counting this as a 2. I think this is a better 2 down here because there's kind of a 5 waves. The problem with this is this 2 is very long for this 4, so I wasn't sure if this is the 1 or if the 1 was up here. So you sometimes want to be safe and say, okay, well, I'm going to be safe, and I'm going to put my 2 as high as possible, because I know if I break the 50%, which is at 146, then I know I have a strong breaker resistance. But I probably switch back and forth. So I think 144 was something I was using. But 144, 147 is a pretty straight break of resistance. Now, if you look at price right now, so we have 50%. Whoops, move the box down here. So we came right up to resistance, which is 382 is a normal wave 4. Okay, we had a direct hit right here. So this we can still, until we break out over 135, we can still call this a wave 4. But just the price action right now is not really aligned with this being a wave 4 top. Okay, so so that's basically me doing it live. Okay, drawing I'm putting the 100. Let's see, let's get rid of some of this. So I'm putting the one here at the top of the 2 and then the other at the bottom, price action. Okay, and that's where you get 50%, 135. Again, if you want to be really safe, put it on a higher one if you're not sure which one the 2 is, and then it just puts you in a safer position. But again, we have price action. We're still under resistance. We haven't broken yet. However, price action is not really aligned to me with this being a wave 4 right now, because otherwise I would expect this to start coming down. Now, if we break support in this area, then I'm going to start to assume again that the white count, the bearish white count, is in play again. Okay. So that's basically how you do it. And again, you do the same thing on the way up. You take progressing price, you put the top of the fib there and the bottom at the bottom of 2, and then you measure 50% down. And that's your stop as the third. And even if it's not extended, I use that approach in progressing thirds. But at a basic level, once you cross the 100, you don't want to 100 extension. You do not want to be in an impulse that has violated the 618 strongly, so you'd have a stop just below there. All right, let's see more questions. Is that a golden rule? Past 50% that is most likely wave 2 or something else? Absolutely, golden rule. Yep. I mean, I use it in my trading, and I tell you with, I'm going to say roughly, and I'm kind of, just guessing numbers, but 95% of the time, you don't want to be in that retrace if your main goal is to make short-term profit. Again, it doesn't mean that you should get out of all of it. You have to with your own trade plan decide. But if you're trying to trade an impulse and the third violates that 50%, it is no longer an impulse. No ifs, ands, or buts. So if you're trading for an impulse, you should think otherwise. Okay. It might mean that the impulse is over and you had a very shallow 4 prior and the 5th has topped and you're in a wave 2. But there's also risk if the wave 4 is not well defined that you have a very bearish wave up next, like an ABC top of a larger degree. There's all sorts of stuff that could be going on, and it kind of depends on context. But the point is that impulse is over. Now, it might be a diagonal as well, but usually if the price structure is suggesting an impulse, most of the time it's a C wave top or top of a completed impulse, and it depends what fib extensions it's hitting. So unfortunately, there's a lot of complexity in terms of what you have at that point, but you largely have an end of an impulse. That's guaranteed. That's the no ifs, ands, or buts. Okay. Once you cross the 100, we don't want to see below what fib? The 618 extension. So that's let's go back to, so again, there's a difference between retrace and extension tools. Extension tools and motive, well, all extension tools, it's called expansion and actually in motive, but on most things it's called extension. Extension is something different in motive, but basically a 3-point tool. So you're using wave 1 and 2, and once you cross the 100, you don't want to cross the 618. Okay, really simple, quick. Because once that happens, you don't know what you have. You may have a C wave top. Next question is, do you use fib extensions more so than fib retracements? I don't know. I use them both. They're like necessary tools. It's like when you're fixing a car, do you use a wrench more than a screwdriver? You use them both. So that makes sense. To me, they're both critical tools. They're used for different reasons. So if I'm projecting a fib setup out in time, then I'm going to use the expansion tool. If I'm trying to track a retrace, then I use a retrace tool or extension tool. Expansion tool is the 3-point tool in motive, so I'm using it a little bit interchangeably. But basically, 3-point is for projecting out in time for extensions, and the retrace tool is used for measuring pullbacks. Okay, so they're both key, just different purposes. Okay. All right, more questions. 50% got it. Okay, is a wick for the 50% golden rule? To me, again, everything is a hard break. The only hard sustained break, if you wick, especially with all the slippage we have in cryptos, if you get a little wick past something, to me it's not really a stop. And that's one reason I don't always keep stops on the market unless I'm sleeping, because I want to see the quality of the price action. So there's some judgment there, but you don't want to give it too much rain, too much room. You don't want to like say, oh, that's kind of a wick, and then pretty soon it's a hard candle. All right, so you just want to be careful with how much leeway you give it. Hi, Ryan. Is wave 3 of a diagonal a good trade like in an impulse? Actually, not really. If it's a large one, I will trade them. But the problem is you're dealing with an ABC. So a third wave of diagonal is an ABC. It's not an impulse. So you have to use a completely different set of rules. And if you're not trading well, just stay away from them. All right. Like get trading a basic impulse down well, and then go from there. Then you can learn diagonals, because diagonal is, you have to use different fib systems, so that you got an A, B, C in the third, and the A will have an ABC structure. So you're using actually the 1.0 extension before you get a deep pullback. That's usually that's the A equals C, and then you would build another A equals C extension off the larger ABC. So it's I don't mind doing like a future webinar on diagonals, but honestly, most people should be trading the diagonal for the reversal, which is when the whole diagonal is finished, and then trade down, or the other way, trade long against the diagonal that's going down. So what most people want to do in the beginning of their trade learning, they're learning and building a trade plan. You want to start there, and then over time learn how to trade a diagonal with the direction of the diagonal, because they're super tricky. Like they're really nasty. Okay. What level of motive do you suggest for a beginner? If you want to do Elliott wave, you have to use ultimate. Unfortunately, it's $1,500. You're not gonna like you can don't get motive wave unless you're doing Elliott wave, honestly, or want to learn GAN. They've got like some GAN tools and stuff like that, which you can use a lower version. But if you want to get motive wave to do Elliott wave, you really have to pay $1,500. You just don't have the tools in the lower version, so it's the ultimate version, highest version. But honestly, I would suggest learning Elliott wave first before you spend money, unless you have $1,500 laying around. Learn Elliott wave on TradingView. You can use our log fib tools that we've shared, and if you haven't used them yet, I can show you where they're available on the site. The code, you have to input the code, and then you have log fibs in TradingView, and then learn there. And then once you learn, again, unless you have $1,500 laying around, then build on it with motive is awesome because it's a lot faster to use. So and then the way all the labels snap to the price, and then they kind of degree themselves automatically. You can't do that in TradingView. But I wouldn't spend the money until you have some skills built up. Personally, that's just my take, but it's up to you. All right. Let's see. Did you say before that you don't want one of three to go beyond the 786? Right, exactly. Okay, so we can do that right now. So that's a critical point, and Japel and I both will say this strongly. So again, let's imagine this is wave 1, red. Okay, this is wave 2, holding. Okay, and now I want to see 5 waves complete, actually before 127, the 618. Okay, I want this one to complete lower than that level. All right, very, very important. Okay, and that means that the fifth. So let's go back to trading. Let's go back to TradingView. Get a 5-minute chart. Okay, so I want this fifth to complete by 127, which I think this price is a little bit different from my so I think it's probably here. This is a different data set, about 122. Ideally, this fifth, and it looks like it can do it. It looks like we have maybe a leading diagonal, 1, 2, and we're probably about to get that fifth. I want it to complete by here, and then I want to see a pullback, and that pullback is critical. If this keeps extending into the 1.0, we have an A equals C. All right, so 786, I'll give it some grace, but I want to see a pullback, because what happens is if we extend into the 1.0, I guarantee you it won't hold. It's not quite a golden rule, but and certainly it can sometimes be nested twos. I'm looking for my labels, so I'm going to assume that we have an ABC, and this will probably be a big WXY top, actually. So WXY, if we end up extending into the 1 before a good pullback, because this is basically the A equals C relationship between this wave, and this wave. Okay, almost all the time, that's the sign of a corrective move. Okay. Think about it. Let me know if it's not clear. I can develop the point. But you really want to have that one develop. Often you want it to actually develop underneath the high, but if you have a very shallow correction, you should use the 618 extension as your ideal and danger zone over the 786. Again, it just otherwise you get a correction. Okay. One more question. Let's see, can we get a group discount maybe for Motive Wave? There is actually. They are a sponsor, Elliott Wave. Rich has lined up what they were offering. I don't know what the nature of the offer is, but somewhere on our site there's the sponsors, and they are one of our sponsors, and there's some kind of deal, but I don't know what it is. But they also have sales, like March Madness sales, every year, and that's when you would get it cheaper. So you can wait for March Madness. I know it's a long ways off, but you can get it cheaper then. Okay, that's all I can offer. I mean, I'm not in the discount department. Okay. So that's kind of, I mean, I've shared everything that I wanted to share. I mean, this is sort of the trade plan that I use, and it keeps me profitable. Again, some of my positions I have that are not profitable are just playing on a larger time frame. So at the top for me, I took off about 25% of my portfolio in December and January. I expressed that on the site. It may have been only 15%. I've seen a big drawdown of what was left. I probably will never do that again. I probably am going to cut my cryptos down to 75% next time. Down 75%, so leave about 10 to 25% on. But that's a long-term fractal. So in terms of the long-term counts, we're in a key point. I may consider stopping out or more, but probably most likely I'm going to hedge my whole exposure before 3,000. That's just my trade plan. What you do with what's happening here and the risks that we have in the long term is you're going to have to develop your own individual plan. And it's the same thing with the swing trades. You can use the swing trades as kind of a guide, but how you position, you really want to be aware, because especially I'm limited. I mean, I can have the team put in 10%, 20%, 30%, 40% positions in the swing trade, but you're better off using those as sort of a trigger guide to consider a trade and position yourself accordingly, and then know the stop that you want to hold, because you may not want to hold the stop that I put on there. So I'm and at the same time, I'm saying all of this so that when you see my fibs, you kind of know how to work with them. And you're also able to, if you start to learn the system, you can ask very intelligent questions about, why are you putting your fibs like that, and stuff like that. So that will make your use of analysis that much better. If you have a real serious trade plan around how you trade my analysis, because I can't post every trade. It's just not possible, and it's hard to manage the tables as they are. So again, I'm just suggesting that you learn this plan, so to speak, so that you can start to manage your own trades. I mean, any other questions? I mean, I'm happy to hang up here. Again, this recording is available. We're about an hour and 20 in, so I can go if there's no more questions. In terms of requests on the board, I got a big data problem and a lot of gaps, so I'm gonna have to fix that before I can do any charts right now, and then I'll try to get on them. I'll use TradingView if sort of the crap starts to hit the fan, but right now we're looking pretty good. Any last questions before I hang up? I'll post this video in a little bit, and you can kind of swallow it all over again, and then ask more questions on the board, and I can answer them there. Let me know. I'm going to sit on for probably about 10, 20 seconds just to make sure everyone's digesting this. Oh, there's actually a bunch. Shoot. All right. This dialog box is crazy. All right, so let's see. Okay, so talk about wave 2 and wave 4 triangles if possible. Example, wave 2. Okay, triangles can never, ever, ever be in a wave 2. Okay, they can be a B of a wave 2, but if you have a triangle and the whole wave is a triangle, it is not a wave 2. Okay. Wave 4 triangles if possible. Example, wave 2 is only ABC. Wave 4 is ABC. Okay, so an ABC is not a triangle. A triangle by definition is a 5-wave move. I don't know how to talk about it. I mean, we can talk about triangles. Let's see. Do we have? And then triangles also can be 9 waves, which we had one in Ripple last year. I'm trying to think of a good triangle to look at. Let's just look at XLM, but XLM is proving itself to be a V-wave triangle, or it's already proven. So triangles are tough. Triangles are tough to spot early on. So when you get this A wave down, there's no way, you know, and we had a clear B wave, and we didn't know whether this was going to be impulse until it broke that. Here, actually, this is a great one to look at. I'm going to talk about that. Get rid of some of my fibs. So, you know, I'm pretty sure I was tracking an impulse here during this time. In fact, February and March and all of that, April, I was tracking impulses. But you can see that this is an overextended C wave. So I'm going to get to the triangle point as we go. This is overextended C wave because we got to over the 618, which is really rare. Happens. C wave was clear 5 waves, 1, 2, 3, 4, 5. Okay, then we broke below the 618, but actually somewhere along the lines broke 50% before we got that real fourth. Okay, so we would have been stopped out of the, if you were in XLM on a swing trade, not a long-term trade, but a swing trade, you would have stopped out around here. Okay, pretty clear, and you would have had some profit if you bought down here at the bottom. So would have still been a very profitable trade. Now, what we didn't know is that once we had 3 down and 3 up was, you know, whether the C wave was going to go all the way down here, but the C wave stopped. Okay, so triangles are really hard to spot. They develop very slowly, and they're very hard to pinpoint until they're just about complete. And you start to see signs in RSI. You can see, let's see if I can show you. In RSI, we're getting kind of the neck down. But even then, it's really not that clear. But you can start to see how RSI has started to trend or compress on this timeline. If I went to larger timelines, it'd probably be even more demonstrable. But you can start to see that RSI kind of trended down in the top and then up in the lower. Okay. In fact, you can see it actually keep that trend. So you actually see a triangle form also on the RSI, but even then you're seeing this as a lagging signal. So you don't really know the triangle is going to play out, but you start to get signs in that often I also see the C waves foreshorten. So example, actually I don't have too many examples here. Maybe the C of this E, this is the E wave. So A, B, C, D, E. Okay, and this C wave is rather short. It's actually WXY. So you start to see the C waves start to foreshorten. Normally we like to see C waves at least be 1.0 of A. They start to shorten in a triangle often. So you're seeing kind of a neck down process, but they're really hard to spot until they really break out. So, or really get to that E wave. So now we didn't know whether this one was going to break up or down. I was leaning up down here, but then this impulse failed and we broke down. And so then that's when I said, okay, well, sorry, but we probably have a B wave triangle. So A, B, and then C, and it's pretty much proven now. We just need one more low in the bearish case, unless this breaks out. And I don't know the price action, whether we're likely to break out or not, but the market's going to assume that it will. And then the other thing is, fib-wise, in a B-wave triangle, I'm probably diverging from the question, but you would normally see a bottom at 786 to 100, and we're a little bit short. So I would actually like to see this one come down. And it may still do that down to that 100, which is 11 cents. I'm sorry, 8 cents, but at least come to 786 at 11 cents. All right. I don't know if that answers the question, but triangles are really hard to spot. They're really great trades when they're complete, but you don't really know you're in it most often, and whether you're in a B or a all of wave 4 triangle until it completes. So that's the tough thing. Again, in wave 2, the only place you're going to find a triangle, which for an Elliott wave person is a 5-wave, is a 5-wave move with 3 with subwaves that are formed in 3s, ABCs. That's our rule, and that's what a triangle is. And it doesn't show up in a 2 unless it's just the B of the 2. All right, hope that makes sense. With how you've laid out entry positions at the various low points in a turn in the market, do you have a hedge system which you use simultaneously, or do you just kind of hedge by eye? No, I have a sort of a system. I'm not suggesting that you trade on Durabit, but I mostly do my hedges on Durabit. It's not a legal exchange for Americans. I don't think I'll go to jail for it, but this is not a recommendation whatsoever. But you can do the same thing on Kraken if you're an American. So let's say on Kraken you've got a position of let's say you own 2 Bitcoin, for instance. Okay, if I think the impulse is going to break down, most of the time, unless I want to make it a primary short trade, I'm going to have to judge by the risk to reward. Right now, the risk to reward to being short is very low. So I'm not going to I'm not going to flip over to a primary short position. I'm just going to hedge. Okay. Now, a proper hedge is if you own 2 Bitcoin, you would not short 2 Bitcoin unless you want to go totally neutral. Okay. A hedge would be 1.5, 1.7 as a hedge. It means you're not going to see the drawdown of that 2 Bitcoin, and your short's going to give you a profit. Now, what's nice about if you do that, if the market turns against your hedge, meaning it does something you didn't expect and turns right back up, you still get some profit because your net position is 0.25 Bitcoin, right? So if your main position is 2 Bitcoin long, and your hedge is 1.7, let's say 1.75 short, then you have a net long position of 0.25, right? So if the market turns against your hedge, then you still make money. And that's the definition of hedge. Hedge is not trying to make money on the downside in net P&L. Hedging means you're cutting your risk, okay? And why I like hedging versus taking it off is that I still have something if the market takes the bullish path. Especially when the total part of the market to me is better risk to reward long side right now, which is the way I see it, unless 3,000 breaks. That is a better approach to me than taking it all off. Another approach is that you just cut your position down, and then take a little bit of a loss on your on some of it while leaving some of it on, and then you start to add again as you go lower. That's another approach. And that's not hedging per se, but that's just cutting your risk. Okay, so there's different approaches to managing money, which I could probably do a whole webinar on that, and hedging versus position sizing, but I'm trying to give you a basic level right now, kind of get this done, and then help people move on to maybe just a bit better management skills as we go. Okay. All right, so let me know if this doesn't make sense. Hopefully I answer your question. You asked her. Let me know if it doesn't make sense. Hopefully it made sense to you. I just realized I never put anybody on mic. If anybody wants to talk on mic, go ahead and raise your hand, and I can give that a try. I said I was going to do that, and I didn't do that. All right, lots more questions actually. All right, so do you think we have bottomed? I don't see that. Those kinds of questions I don't think are very helpful. Do we think you've bottomed? Right now, I'm tracking a bullish case. That's enough said, right? I have my supports. I don't need anything else. I don't need to say this is a bottom. I have a bullish price action that I'm tracking right now. That's all I need to trade. Okay, so I think that's a really important mindset, because I think a lot of people on the site go, hey, what's your primary view? Does it matter? No, it doesn't actually. It really doesn't. My opinion about what path the market takes is irrelevant. I have bullish price action off the low, which I am willing to trade. That's all I need. Okay, so I think it's important for people to start to shift their mind a little bit in that regard. Not worry about what's primary. They need to mind where resistance is. They need to mind where support is, and what the setup is, and whether the setup has good RR. If you're worried about anything else, you're actually not productive. Okay, I hope that helps. Because I see a lot of people kind of messing around with like the primary versus being right or wrong and all that. No, it's support, resistance, and setup, nothing else. All right. Question is, will this be available later? Yep, absolutely. I've got a recording, and then I'm gonna process it later and be on probably in a couple hours. All right. So one question we have here is, so if we hit the 1 in Ether around 127 and it comes to around 117. That is where we buy Ether using the triangle process. I don't know what you mean by triangle. Oh, the position size. explained earlier. Yeah, so again, if we have 5 waves, and it is trying right now. So if we have 5 waves, Bitstamp, it's actually, BitMEX Bitstamp, it's actually about 122. Okay, because my I have a Tether tainted data set here, which I'm going to try to change. I'm going to add the Coinigy API today and get that all fixed. I'm going to have to bite the bullet on the 85 a month because I'm tired of this API. But anyway, if we hit 122 roughly on Bitstamp and BitMEX, we have 5 up. And so if we get that, I'm pulling some fibs over to my left side. If we get that, then the next position add will, the 382 retrace will be about 117. That could be a little bit of an add, but the deeper pyramid would be down to 114. That would be where you would want to put a larger position, and then the stop would be just below 112, which is a 764. And so roughly about 111 you want to stop out if you're trading that short term. I mean, there's a larger stop down below, but honestly, I probably will hedge big time now if we drop below 111, at least on this round. Okay, so that's where you can add, and that would get you in the heart of the third if it does kick off. And if you think about this, if you were trading all of this, and I didn't take all these trades because I wasn't always on my computer, but we had 5 wave up. Okay, you can chase that if you want, but there's no need to. You would have added positions. Actually, there was a little bit of a divergence at 116. Okay, and then you would have added some more last night around 108 because we had a completed pattern. And I'm sorry I wasn't on the board. I was out with some friends last night. But you'd have an add there, and now we have 5 up off the low, and we have adds between 117 if we get 5 up, and 115 roughly, with a stop at 111. So we've had these progressive adds, and right now a stop should be held below 108 at the very least if you're trading short term. Again, I will hedge below 108, but actually now I'll probably hedge below 111. Okay, so we've had a trade building, and now we're going to come up on another entry before the heart of a third, and I can't guarantee to you that it's going to kick off, but right now it looks pretty good. So we have stops to manage our risk. It's all pretty low risk trading from here if you actually just follow this plan. Okay, never mind like all the heat we've taken from above, but that's long term. That's different. That's trading a different fractal. If you're trading short term right now, we have a very low risk situation in our current price action. Okay. I'm looking at more questions. There are a lot actually. Thanks, man. Okay, by triangle process, I mean transfer. Yeah, exactly. So hopefully I covered that. I mean, yeah, the triangle would say you want to add, if we get 5 up to 122 on BitMEX, you want to add at 117, and the bigger pyramid at 115. And if you want to add a little bit more down to 113, that would be the 764, but the immediate stop at least is 111. Okay. If we break 18.6 cents resistance on XLM, then it can't be a red wave 4. Exactly. Yeah. If we actually so I have XLM up right now. We can do that same process. So we can take the retrace and we can put it down here. Let me make sure I get it in the right spot so we don't mess up. So we can put it down right here, and we can put the 2 on the 0 on the 2, which I've got my label off. And then we can mark 50%, actually comes out to 18.2. If we go over, you can see how the market reacted to that level, right? I mean, these resistance levels matter. But over 18.2, most likely this will break out and I'll take the lower path. What I just don't like about this is it hasn't extended properly, more so, but I'm not going to argue with it if it starts to break over resistance. It may be that if it breaks over resistance with this being very incomplete, unfortunately something else plays out, so we have to be a little bit cautious because this doesn't look complete, and it again didn't extend to that 786. But honestly, I mean, I don't want to fight a market. I don't want to. Well, I'm not shorting XLM at all, but I don't necessarily want to be too aggressive on this if it breaks over. But at the same time, I can't argue with the bullish case. All right, and it may be simply that we have truncation in this one too, and I haven't looked at it. Fantastic, thank you. Yeah, no problem. One Lambo. A few months we'll all have driving Lambos. No, I have no idea. So that's all the questions on the board. If anyone, I'm gonna look at hands, see if anyone's got hands up and they want to try audio. Oh, we got somebody that's. Mike, do you want to be on audio, or you've kind of asked a bunch of questions, so. I'm happy to put you on audio if you still think it's relevant. Let me know if you don't. Or put your hand down, one of the two. Let's see if I can unmute you. Okay, I'm unmuted if you want to talk. If you do want to ask more questions. Okay, I guess not. No problem. You've asked all the questions, so hopefully I'm answering them all. All right, anything else, guys? Let's see. Any other questions coming in? Oh, we have more. Clicked it by accident. Okay. Don't have mine. Okay, perfect. All right, so that's all the questions. Thanks for bearing with me. I hope it was useful. Again, this is how you use Elliott Wave profitably. I know it's tough to get used to it, but it's learning how to trade Elliott Wave is, I think, maybe even more difficult than learning the analysis, to be honest. I'm still learning how to do it better and better myself. But most of the time now, since I know the plan, it's just me controlling my own emotions. I thank goodness I'm profitable consistently over time, but I often don't see the P&L that I want to see if I traded my own plan. I hope that makes sense. And so if you just stick to a plan consistently, manage your risk properly, manage your stops, you will be profitable. I can actually promise you, if you do your homework in your part of the game, which is that position, that emotional management, and following a plan. Even when my analysis is off, at least I know where the stops are to tell me that I'm wrong. If you're trading it and understanding that, you'll stay out of trouble, even when the analysis comes out bad, which is normal. It's part of the process. Sometimes I get the market wrong. In fact, sometimes I have really dry runs where my analysis is off. But in the end of the day, I give you the levels where my analysis is invalid, and that's more important than me being right all the time, honestly, because nobody can be right all the time. Okay, so I hope that helps. I hope I've given you kind of a way to manage it. And if any other questions, please ask on the board. I'll have this up. It'll probably be about an hour or two before it finishes processing on my computer. So thanks everyone for attending. I'm going to just take a quick look, make sure no one else has extension. Or questions. Let's see. Oh, we got more. Are Wave 3 or Wave C better setups? Wave 3, period. You must trade the Wave 3. If you are new to Elliott Wave, do not trade Wave C waves. We do a follow-up Elliott Wave seminar. I think if there are more questions that develop that are not answered for people, I'm happy to do this again. I think what's good now is that people digest what we have here, because hopefully it's covered at least enough to trade. Likewise with XLM, should the resistance on EOS be 402, which is 50% retrace as well? Let's look at it. It's a great question. So we have, so what's a little bit crazy. So here's a good point that we have to manage. We have two levels. Here we have a little fifth wave, and so the resistance for this completing is 352. Okay, so if you look at this, let's check it. Actually, no, sorry. If this is the right, probably 281 to top of the two. Hopefully, I have it right at 470. The resistance for this completing is 363. Okay, so that's 50% right there. But we also have to consider the whole C wave down. And if we do that, we also have another level of resistance here at 661. Honestly, at the very least, if we're over 661, we're going to be in a big B wave that should travel up to here at the very least. So if we're really getting that far, and especially with this triangle, there's often a feedback loop that happens at the top of a triangle once it gets swallowed up. So we should be pushing much higher if we take out this triangle that's up here in wave 4. All right. So 352, I think is what I said, and then again another one of these 50% marks at 661 from the bigger C wave. I would like to see a position sizing versus hedging webinar if there are other interest on the board. I can try to do that. Let me think through that and how to plan that, because I think right now if I did a webinar, it would be about 5 minutes long. So I need to think about how to do it better. All right. So any last questions? I'm watching the thing for more questions, and if not, then I'm going to hang up. Going once, going twice. Sold. All right, guys. All right, I'm going to end this. And again, if anything else comes up on the board, please ask them. And more ideas for webinars are awesome. Each of those questions, I'm totally game. I just have to think through it. Like, what else would I talk about is the question, but sometimes I just don't know until I think about it. All right, guys, thanks, and we'll see you on the board.